So tip number one is taken from a book called The Richest Man in Babylon. In that book, one of the first principles that they share is that you must live off 90% of what you earn. 10% minimum must be used to paying yourself first, rewarding yourself. And what better way to reward yourself than to invest in something that matters and that will bring something of value in the future? In this case, that being property. So take 90%, have a budget that breaks down all your living expenses and other costs, right? In that, you will also include your general installment for your particular bond, your vehicle, your insurances, your electricity, your basic needs, right? As well as your food and groceries and the like. Don't forget entertainment. I always emphasize to my mentees and the people that I coach in this particular sector, without getting paid for it, by the way, but people that I coach in this particular sector, I always emphasize that you must have a percentage that's used for leisure. Do not there must be that money that's used for leisure, but the allocation thereof must be within that 90% ratio. What do we do then with this 10%? Simple. You take this 10%. In fact, let's put a figure to it here on screen. So let's say I net 30,000 Rand, right? 10% of that is 3,000 Rand. 3,000 Rand multiplied by 12 months is 36,000 Rand. So if you take the complete 3,000 Rand, which is 10%, and you add it into your bond as an additional payment, it means that, taking another example, if your bond is at a value of 1 million rands, it means that each year you'll be paying 36,000 in addition to the capital that you'll be paying off between 8 to 10,000, depending on your interest rate, how your credit record was when you got the bond and everything else. Very, very key. 36,000, you multiply it by 10 years. That's 360,000 paid extra into the bond. But remember, we're being conservative because we aren't even including other essential factors when you talk about the interest breakdown. How, when you've put in 36,000 in the first year, then that means that the interest keeps on going down. Therefore, the capital that you pay will always increase because now you haven't chosen the option of recalculating. In other words, you haven't told the bank, now that I've paid in this extra, lower my installment. So don't do that. Always pay that installment that you got at the beginning and then pay the extra. You will see that within 12 years to 14 years, if not less, could be 10 to 14 years, your bond will be paid off and you won't be stuck in that particular debt for 24 years. So that's the first principle. Pay in that particular amount each month. So I used it now to say 36,000 to show you the general idea of how much you'll actually be putting in. But that meager 3,000 in the bigger scheme of things, that small amount of 3,000 when you earned 30,000 would make a massive difference, including the fact that it will give you a good name, so that when you want to now move to another home or you want to buy or purchase an additional property, you'll have something of value that you can then look back on. So that's tip number one, done and dusted.